Hey everyone, Charting Man Dan checking in on the chart. So yesterday we saw healthy rotation among our major sectors, and today the bulls followed through with that. We've got the FOMC tomorrow at 2 p.m. Eastern. We're going to anticipate solid volatility. The conference at 2:30 will see solid volatility, and then we're probably going to see solid volatility to end the week. Right now we're seeing a good bit of risk on action, and risk on just means people willing to put their money in the market in some of the higher risk and reward sectors and individual names. We'll look at some of those in just a moment. So the S&P 500 here, the futures chart, this was an uptrend resistance line we were keeping an eye on. We stalled out at that level on the morning, set an hourly higher low off EMA 12, and then saw continuation into the end of the day for a strong close up near the high of the day. So clearly we can say the hourly EMA 12 is a good support guide for the S&P 500 futures charts, and the bulls have control as long as that support is holding. Checking in on resistance, the S&P 500, we can see SPY has a level right at 400 psychological and then 405.90. And we've made a decent bounce at this point off those lows, and we're watching, can the bulls shape up the monthly inverse head and shoulders pattern? It wasn't much monthly consolidation, but that's what we're watching for, bigger picture. Right now, the probabilities are favoring a 25 basis point hike by about 80% or so. It's been fluctuating a good bit. So keep that in mind. If it's anything different than 25 basis points, then we're going to anticipate that's going to be one of the more volatile reactions. The NASDAQ continues to lead the way, daily bull flag confirming, and we're now at a key resistance zone as the bulls try and see continuation. You can see we've topped out here pretty much 5 or 6 days in the past, and we're right there right now. So again, it's the FOMC that's going to dictate whether we break through this resistance with the NASDAQ or reject from it. Right now, we can say the pressure's on the bears. The bulls have done a good job running up into the FOMC. There's not any fear, and this is the narrative of, the Fed's going to pivot or slow things down or pause. And so if I'm a bear, I'm not comfortable at all. The bears need the FOMC reaction. The bulls don't need it. The bulls have been doing fine without it over the last 7 trading days. So that's an important distinction to make. It's just putting my mindset of, if I'm a bull or a bear, how am I feeling right now? And right now I don't have a directional lean. Once we get some information from the FOMC and some reaction, I will then shift my IRA around in the direction that I feel is best. But I'm going to go in flat. And again, if I'm a bear, I'm not comfortable heading into tomorrow. The financial sector had a big gap up open and then very little volatility. So the last gap up we had was a profit-taking day, and this time the bulls held those gains. And we saw some nice defense at the low of the day. It was pretty much just sideways range bound, which after a 2% gap up open, the bulls are just fine with taking sideways. That just means hold on to the gains. Don't see a significant amount of profit taking. The financial sector has short-term resistance now of 32.18. If the bulls can clear 32.18, they're going to start to gain some confidence that a temporary bottom is being set. And we have that triple bottom down at the low that we are now bouncing off of, and looking at KRE, the regional banks. Again, not convincing. We're building a base and need to clear 47.11 as a resistance level from here to be looking for that follow through. We were watching the 4-hour tightening equilibrium from yesterday, and that did break bull, and 47.11 is the second level that needs to break if we're going to see follow through. NVDA, daily bull flag, trying to confirm. A ton of QQQ related names, tech names, have these daily bull flags. Meta is trying to confirm a daily bull flag. We just saw QQQ, NVDA, all these little bull flags trying to confirm. We know Apple's been strong. Apple's in breakout mode. This is a great sign for the tech sector bulls. Apple just cleared a clear resistance zone and is now hitting the highest price that we've seen in almost 6 months. Apple is one of the lead bull generals, as we know, in the market, and this is a big vote of confidence. Obviously, an FOMC bearish reaction could squash this back down, but one of the, if I'm making a list of reasons I'm bullish or reasons I'm bearish looking at the broader market, Apple is definitely in the bull column. And if we go to the monthly time frame, we're going to be looking at 175.59 as the next major resistance level from here. Again, don't forget these 4-month charts. If I tell you this is an hourly chart, what direction are you looking in? For me, I'm saying healthy consolidation, hold of EMA 12, potential bull flag. This is the 4-month time frame. So again, I'm open to both directions. I'm open to all-time highs in the market from here, and I'm open to new fear lows. I have no idea which we're going to see, but I'm ensuring that I'm going to be ready to act on either and benefit from either. And so Apple and SPY, same thing. Again, the 4-month time frame, there aren't any red flags on a lot of these 4-month charts at this point. That can change, absolutely can change. But again, just reiterating the possibility that bulls do come out on top, at least by the end of the battle. So Tesla had a very clear resistance zone that we rejected from yesterday, and it just skipped it. It just said, hey, let's just gap up over that quadruple top, which it did, and saw big time follow through. Next resistance is 200 psychological, 248 cents is where we rejected last time, and the weekly higher low is now convincingly set. Can the bulls break 217.65 to confirm the weekly uptrend for monthly bounce follow through? Or are we going to set a weekly lower high compared to 217.65 and continue to tighten up within this range? Tons of space for an hourly higher low next consolidation. Bulls strong overall. Healthcare just grinding up 129.20 resistance from here. It's participating just like energy is now participating. We essentially had last week weakness in IWM, energy, XLF, strength in semiconductors, crypto, gold, and tech. And now that the weaker sectors have found a bottom and are bouncing, the stronger sectors are still staying strong and up at the highs. So we're not getting that inverse relationship, which is a good sign for the bulls overall. Again, the burden's on the bears. The bears need help from this reaction. IWM, resistance from here is 179.26, bouncing with the financial sector, had that same base of support established. And again, with the risk on that we're seeing, bulls want to see IWM with strength because IWM is the Russell 2000, these smaller cap 2000 companies that are higher risk and higher reward. And it's names like ARKK that we're going to be watching as a gauge of risk on. Again, Bitcoin obviously up significantly over the last couple of weeks. We've got ARKK trying to shift this momentum. Weekly bounce finally underway. I look at names like PLTR. So again, just their daily charts getting a little bit of a shift back to the bulls after the bears controlled the last month. So keeping an eye on that shift. The crypto stocks, coin is up 65% since the banking fear. And these crypto names were showing very notable relative strength. There was relative weakness pre-market, and that faked me out a little bit because I was looking, okay, if we're going to gap up and see any kind of profit taking, we're already weaker in these crypto names pre-market, so I'm going to be looking to short them. So I made an attempt to short Riot on the open, just looking for a level to play off of. And at that point in time, it was the high of the day, right around 854, and very quickly stopped out. It looked like, we're about to see the bears push down. Nope, bulls got it. And again, it was very notable to me the amount of relative strength that these crypto names saw compared to Bitcoin and compared to the NASDAQ. So again, these are some of the highest risk-reward companies that there are, and they're trying to hit 6-month plus highs. So that's part of the shift. GME just had earnings, and it's got a big bull move on earnings after hours. It's up maybe 30%. So just keeping an eye on risk on. People keep asking me about the cannabis sector. Cannabis sector has been the weakest sector in any market that I've ever seen in terms of, not ever, but in terms of where we stand right now. I mean, we're the weakest sector out there in cannabis. And so CGC just hit the lowest levels in years. And we have a little bit of a bounce, but I'm keeping it simple. Number one, I have no interest in entering into weakness. Anybody that's entered into weakness in the cannabis sector in the last year and a half has regretted that decision every day since then. I need to see bulls prove something to me, and I can just make a simple statement. If CGC is under daily EMA 12 resistance, the bears have full control. TLRY has a little bit of a bounce underway where we do have a little higher low and higher high. TLRY is clearly the strongest, larger cannabis name right now, but anything under 359 is a weekly lower high. And we can bounce 30% more and still be in a weekly downtrend. So I have no interest until bulls prove things to me. MSOS, get over 736 and you'll be proving something. Just hit new all-time lows today. So get over 736 and we'll say, okay, that's different. Bulls are proving something. But until then, again, it's the kind of thing where you do not have to nail the bottom in this sector. When there is a shift, when there is a catalyst, there will be opportunity. And you will want to be in with the wind at your back where you're in profitable positions from the get-go, not trying to enter into weakness where we're at multiple year lows and hoping we bounce. That's not the kind of, I love playing bounces. That's not the kind of approach for this sector if you want to be profitable. There's opportunity cost of sinking your money into these names and waiting. You gotta be waiting for the momentum, and it'll be, you're not gonna miss it overnight. It'll be notable bull volume for weeks. It'll be daily uptrend confirmed, weekly uptrend confirmed. It's gonna take a while. Look at Bitcoin. Bitcoin's a great example of this. Bitcoin was all bears, complete control, and we confirmed a little weekly uptrend when 18.4 broke. And from that point forward, it's been way easier to make money as a bull than at any point in the prior many months. We got a weekly trend change that told us the momentum was shifting. Traders react to that. So that's my approach to the cannabis sector. And again, you're not going to miss the move. If there's going to be a meaningful move and we're going to bounce 100% off the lows, which at this point, I mean, we have to see 100% bounces in these names to even recapture a fraction of what was lost. Plenty of opportunity if the move is for real. If it's a fast, hard move up, it's probably not going to stick. You want the slow and steady and building of supports and breaking resistance. The biotech sector is still very weak. Very notable weakness today, closing at the low of the day. Clearly the weakest sector on my screen, so no risk on in the biotech sector at this point. Dollar is still weak. Daily downtrend will be our guide. Gold started to consolidate. So there's an inverse relationship between gold and the financial sector. I don't expect it to stay around very long, but we could see the financial sector. Let's pull up a side-by-side here. So financial sector on the daily time frame, obviously we know it's been dumping, but we had one bounce day on the 16th. That was when gold putted around sideways a little bit. And we can say this is the second biggest bounce day. This is one of two biggest bounce days we've seen in weeks. And this is one of the biggest pullback days we've seen in weeks. So gold is not bouncing from hourly oversold conditions. So we tried to set up a back burner bounce, but just kept free falling in stair step. So it's an hourly stair step drop. And it's not ideal. Bulls ideally would have seen hourly oversold conditions lead to the daily higher low. That's how we know it's the strong uptrend. But it looks like some profit taking before the FOMC, which is certainly never a bad idea. Anybody that has big gains in the last week or week and a half, certainly looking to take some off into the unknown event of the FOMC tomorrow. But we're going to look for a daily higher low in gold. There's just no sign of it at this point. And we're going to look in silver as well. Silver, still a daily uptrend. Less significant consolidation. Silver did not go up as significantly. It's not pulling back as significantly. The miners had daily consolidation underway today. And we're not going to lose sight that the miners could form a weekly lower high. And same with silver. Gold broke, but silver and miners could just form a weekly lower high with where we stand right now. Oil, daily bounce underway. 69.83 is resistance on this May contract. Energy sector is bouncing notably with it. Keeping in mind anything under 82.71 is a daily lower high in the energy sector. Hourly RSI is getting extended. So I'm starting to get, if we didn't have the FOMC tomorrow, I'd be scouting a bearish entry in XLE tomorrow. But that's going to be out the window as far as, again, it's just going to be the reaction to Powell. And again, oil, we got a 4-hour uptrend as our guide, and it's all about 69.83 in the short term, and we know eventually we're going to have to confirm a daily uptrend if this move is going to have follow through. And natural gas, big bounce, bulls trying to defend support. So this is the bulls' last stand, trying to hold here. Big bounce, must confirm an hourly uptrend. Once we top out, hourly higher low and higher high needed, and then it'll be an attempt at forming a weekly higher low. But a lot of proving still to be done. This is just the initial bearish exhaustion into key support, shorts covering, bulls buying off support, leading to this nice move up. But again, a lot of work needed. 4-hour trend change really is what's needed for some confidence that that support level is going to be able to hold. So again, overall, bulls are looking good in the short term. We do have some resistances nearby, and we know that it can go either way tomorrow, and I care more about the reaction Thursday and Friday than I care about the reaction in the final 2 hours of trading tomorrow. But bears need help. Bears need this momentum to be squashed, and we'll see what Powell says tomorrow at 2 p.m. Appreciate you watching. Do good things. Have a great day.